One of the ironies of your business is that the best time to raise money often isn't the best time to spend money. As we both know, and as other people will say, public equities are very fully valued right now. How would you describe conditions for private equity?
Well, I think, as you said, I mean, the values in the public markets are high. I think any metric you look at would suggest that. But our job is to really go find opportunities within an otherwise highly valued market. And there are discrepancies, sector by sector, company by company. So today, I think we think there are some very attractive opportunities in healthcare. And also where you can deploy capital behind your portfolio companies that have synergies when they're looking for acquisitions where we're not looking at just standalone buyouts. I think that could make a lot of sense as well. So yes, the market is highly valued, and as a result, I think you need to be cautious at this point. But there are sectors and there are ways to look for good opportunities that can still make a lot of sense for private equity investments.
Doesn't sound to me, though, like you're in a hurry to deploy capital.
No, we're not in a hurry.
Not with things where they are now.
As you know, our investment period for each fund is 6 years. And so a big part of what our job is to be patient and find the right opportunities at the right time. There'll be times where you really want to lean in, and there are times where you need to be a bit more cautious. And I think right now we want to be more cautious, not just because of the valuations, but there's obviously a fair amount of uncertainty around the world and even in the U.S.
Let's get into some of that. Going into the election, KKR was anticipating an economic downturn at some point in the next couple of years.
Right.
What do you expect now?
Well, I think we're still trying to put everything together. There's not a lot of certainty with a lot of the policies that are being discussed, and while many of them will be very good for the economy and for growth, there are others that may not be. And so we really have to take a step back. But what our most recent thinking is that we probably will push out the slowdown that we were talking about. And we had initially, as you mentioned, talked about a slowdown sometime in the 2018 period. Now we think, given some of the strong economic data coming out of the U.S., some of the pro-growth policies that the new administration is advocating and hopefully can get through, we're probably looking at a slowdown in the 2019. So it's pushed it out a year. We don't think it's been eliminated. Who knows whether we're right or wrong, but we don't think it's been eliminated. We just think the strength and the optimism and the momentum has probably pushed it out for a year.